Good morning. Good morning. Happy Thursday. How's everybody doing today? Let's get it started.
Welcome to the show, it's Mortgage Talk. Grab a coffee, sit, and let's unlock the dreams you've got, the place you crave. From the front porch swing to the hidden cave. Talk about your home, talk about your plan, talk about the future where you'll stand. Your mortgage, your dream, your story to give. Let's talk about the place where you want to live. Got questions? Here's the place to be. A TikTok Live Mortgage Jubilee. Fix or float, we'll break it down. From city lights to your small town.
All right. Good morning. Thanks for being here, guys. It is Thursday, December 4th. Hope everybody is doing well. My name is Kenny Murden. I am new to TikTok. I'm not new to lending. I've been lending since 1999. And over the course of my career, I have been a lot of great support for loan originators and real estate agents as it pertains to answering questions that they might have, restructuring deals that they otherwise might thought could not work. We've found ways to get people into homes. So if there are any questions that you have, or if you know anybody that is looking to purchase a home or refinance, I'm more than happy to help out. Feel free to share this. If you like the content, share it with those that might need such assistance. And I am here and happy to answer any questions they might have. And one of the things that I go over is being a wholesale mortgage broker. I talk about having access to really good pricing. So rather than just saying it, I do like to also show what I'm able to do. So what I did here is I priced out today an FHA 30-year fixed at a 680 credit score, $400,000 purchase. And just trying to see where pricing comes in here. It looks like it got a little bit worse today than it was yesterday, which is absolutely fine. It's not a huge difference here, but it looks like we're at, for 1 point in lender fees, which is 1% of the loan amount, which is just right under, 400,000, so about a 4,000-ish closing cost. We are at a 5.125. 5.125 interest rate on that deal. So not bad. If you have any scenarios that you need priced out, I'm happy to do so. If you have any just general questions about anything mortgage or real estate related, I'm happy to answer those as well. But as far as it pertains to pricing, just need some simple information. Is it a purchase? Is it a refinance? What's the loan amount? What's the credit score? Where's the house? Things like that. And then we can get things priced out. Now, if you are already started with another lender, and let's say the quote that we're able to do is significantly better, but you already have an appraisal working with another lender, that's perfectly fine. We can accept transferred appraisals. That'll save you both time and money, so it allows you to be able to close on time without having to delay getting another appraisal. So just wanted to make sure that you understand that as well. Let's see. I'm worried about buy due to house crashing. Oh, okay. So Jesse's saying that he's concerned about the home values going down, and I've been hearing some information about that as well. You're always the algorithm is going to feed you whatever whatever you're looking for. It's wanting to agree with you because it wants your attention. The current experts are saying that home values are going to continue rising at a very moderate pace, like a 1 to 2% increase in home values. And that's personally what I believe is going to happen. I don't think we're going to see the huge rise in values that we saw over the COVID era. I think that is pretty much over for right now. The argument for potentially large increase in home values would be hyperinflation, right? So if inflation is still not under control. So if we start seeing things like lower interest rates and or higher median incomes going up, that can push home values much higher. So I am not, so we disagree. You're worried about prices going down. I'm not worried about that personally. I own 2 homes right now. I'm not worried about their values crashing or anything like that. And like I said, I started in 1999. I've seen a crash, the 2008, mortgage meltdown. And then being on this side of the fence, though, I also know how and why that happened as far as really bad underwriting. And actually, it's a kind of an interesting topic of conversation where, the narrative was predatory lending. But at the time, if you didn't give a loan to somebody that would otherwise qualify with those ridiculous underwriting, things, so if you're in charge of the French fries at McDonald's, you could tell a loan originator that you're making, $50,000 a month, and you could buy a $2 million house without any verification of income or assets if you just had enough credit. And this was back then. This was some of the stuff that was happening. You just had good enough credit, and even then you didn't really need that good credit, and they would go no money down. If you didn't give that loan back then the loan originator could get in trouble for discriminating. And then after they gave the loans, they were in trouble because they were predatory. So they were kind of damned if they do, damned if they don't. But ultimately, it was a bad practice. It was really, bad rules, and that led to a whole bunch of people that couldn't afford the payments. And so a lot of homes went into foreclosure. And when you have mass foreclosures, that's what tanked the housing economy. And then ultimately, the housing crash tanked the entire economy. And so that's just the way that I see it. I'm sure some people see it differently. But now that they've fixed the way that they underwrite places, and you have to show the ability to repay, the only way we're going to see a mass reduction of pricing due to foreclosures is if we see massive job loss elsewhere. I'll give a scenario there. Let's say AI takes everybody's jobs, and there's massive layoffs. Now those people are not able to make an income. They're not able to make their payments. They have some foreclosures, but it needs to be concentrated. And let's make an argument for it. Let's say there's very specific areas of the country where there are, AI takeovers. So wherever, for example, if you're, what does AI do really well? It does coding really well. So if you have coders that are all in one metro area and AI takes all their jobs, coding pays really well. So let's say those coders all lose their job, and that pocket of that area has mass foreclosures, drops the prices right down. But I think it'll be localized and I'm making the best argument for prices coming down, which I don't think is going to be the case, because let's say there were those mass layoffs. Those people still have talents. They still have, qualities that they bring to the marketplace. They're going to find the next best thing for them to earn an income, to be able to make the payments, to be able to better themselves, to better their families' lives. 1 second here. Apologize for that. But anyway, so that's just a little bit of the way I see it. I don't think we're going to see, a big crash in the market. And I've been watching people for years have that same fear. I don't want to buy right now because I'm worried about pricing going down. And all that's happened. That was pre-COVID. I've been hearing that, very loud, home values can't get any higher. Well, they've done nothing but go up since then. I mean, there's been sometimes, like in some areas where you'd see it come down, but that's only because it went up so much and then it pulled back a little bit. And so I would say talk with a really good real estate agent that understands your market. And then also, like I've been talking here in the last few days, ownership is not a one-size-fits-all option. I think it makes a lot of sense to rent if you're looking at a very short-term situation. You need enough inflation to happen over enough time or enough time to pay down your debt to be able to sell your house profitably, meaning it costs a lot of money to sell your house. So if you're going to, not be upside down in the property, it might make more sense to rent if it's short-term. So so I got pre-approved, did the loan application, and even wired my $2,500 to escrow. Now my lender said I got to do the whole loan application again. What does that mean? If you're pre-approved, you did the loan application, I would assume. The way it works, it starts with loan application, then you send in your income and asset documents, and then you're pre-approved. To have to do the application again, I would ask, are you changing, who's on the loan? Maybe a co-borrower came off or you're adding one. That doesn't make sense, so I would need more information. So I'm missing something in that story. And then Sean says, I got a loan in 2007 and they try to foreclose every year. Raise our mortgage to $68.50 a month. Looks like there might be more to that comment there, but you got a loan in 2007. They were trying to foreclose. Now they're raising your mortgage payment. Obviously 2007 was at the height of that particular, value bubble. And then we saw in 2008, the prices come down. They have since recovered and then some. They've gone up. But I'm curious to hear what else you were saying there with your comment there as far as what's happening. Now, I'd be curious because I don't know your loan amount. Is $68.50 a month? Does that make sense? Or is it something that we need to refinance and get your payment under control? Sounds like there might be some payment pain there. And so I would take a look at ways to get that under control. And then also, as I was showing here, because there's a lot of new people coming in, if there's a scenario that you want to price out and look at, because I don't want to just say I have really good interest rates. I want to be able to show you this is how it looks. So David says, so it's a new built 2. I went with a 580 credit. So they told me that they're going to do I'm going to guess a rapid rescore or something to try and get your score up. They're going to do a soft poll December 17 to see if it goes up. Is there a reason why the score would go up? Like what I would do if you want your score to go up, the quickest way to do it is have a friend or family member add you onto their good credit cards. Do 2 of them. And a good credit card would be the highest available balance. Hopefully there's nothing owed on it, because if there's anything owed on it, then you'll have to debt ratio that payment. But let's say they have a $10,000 limit, no balance, and it's been open for 10 years. Well, that 10 years of card history will show up immediately on your credit report and your score will skyrocket. That's the best tip or trick to boost your credit score very quickly. We also can do a rapid rescore, and I can get into that. Sean says, could I give you a call later today? I can pay you for your time. consultations are free. The way that we get paid is if we close a loan, there's a commissionable event there. So yeah, call me, yes, and the advice will be free. David says, so I had a 2,000 in collection, which was 2 accounts. I cleaned them out. So paying off collections doesn't necessarily help your score, because anytime you pay, let's say a collection was 3 years old, when you pay it, you're making it current. You're making it new information. So I always go off, my credit consultation is you don't want to atone for old debts or sins of the past. You want to focus on creating new good credit to affect your credit score positively. So hopefully that helps that you paid it off, but it could hurt if it was old and now you made it current, just to forewarn you. David said the loan officer said once they got paid out and one was deleted as well. So hopefully the loan officer did something like a wayfinder, or basically ran a scenario that said if you do X, Y, and Z, your score should go up to whatever is needed. But honestly, if you're at a 580 credit score, that's good enough for most programs. So unless you're trying to tweak something with getting a down payment assistance program or better pricing or something like that, you can get a loan with a 580 credit score is what I'm saying. You can get a good loan with a 580 credit score. But are there advantages to having a higher credit score? Absolutely yes. Is higher always better? Absolutely yes. So certainly look at those options. Sounds like you're doing a rapid rescore. That's what I'm assuming based on what you're telling me. So that's basically where we can take the situation and say if you do X, Y, and Z, we should expect a certain amount of increase on your score. And when we do that, we're able to then use that higher credit score for the transaction. I offer that on every one of my deals for free. Not all lenders do that, but in the case where you're talking about being closer to the lower of approvability at that 580 mark, that makes a really big difference. But it doesn't make as big a difference if you're at a 697 and we're able to get your score over 700, but it might save you $1,000 on closing costs. If I can save you that $1,000, that's exactly what I'll do. Let's see. What do I need to do to refinance my home? Own 2 years under FHA in Florida. Just apply. 2 years ago, interest rates were a lot higher. So I can get you an application link. Just text me to the number above and just say, refi Florida, and I'll be able to get you the application link. But yeah, 2 years ago, you're probably somewhere around high 6s, low 7s. And right now we're looking at, mid to low 5s, depending on your credit score. David says, yeah, that's how I see it too. They made me a game plan to follow, and I can see it is what you mentioned, rapid credit pull. Yeah, it has different names. Though some of them are credit upgrade, rapid rescore. what's the other one? But they're all the same thing. So it's basically like saying if you have, even if you just have your credit card statement, like I pay my credit card every month in full, but if you pull my credit report, it's going to say that I owe a certain amount of balance. Well, when I pay it off, then it goes back down to zero. If I prove that with an updated statement, that can improve my score for a transaction like a purchase or a refinance. Mid 7s, had a 750, but score has gone down since then. Does that matter? 750 is a very strong score. FHA is very forgiving, so if we're going to stick with FHA, we're good. I think down to about a 640 score, you still get elite pricing. So you're probably fine depending on how much it went down. Now, if it got below 600, it still approves, but the pricing isn't as good. I would have to update my quote here. Like, I'll do that right now, actually. So this quote that I did here is assuming a 680 credit score. I'll modify it and say 580. And then let's see what that does to the interest rate. So it bumped us up from 5.125 up to 5.5. So about a 3/8 difference if our credit score was lower, which is substantial. You definitely want the higher score if you can. David said, I just don't understand why they would want me to wire money to escrow company and why they deleted my other loan application. Well, I understand why they would want you to wire the funds to the escrow company. It sounds like you're under contract. And so that makes sense. That's perfectly normal. What's not normal is having to reapprove or reapply for a loan that you've already been pre-approved and sounds like you should already be in underwriting. So that doesn't make as much sense to me. Maybe it's the case where, maybe it's something where they're submitting it to underwriting. I don't know. I'm trying to make it make sense, but yeah, if they're, so yeah, I'm also worried now because when I went to get pre-approved, I was working a lot of hours, so maybe your hours are less now. Yeah, so now you're working a few hours. If you've been working there for a full 2 years, they're going to take, it sounds like you have variable income. So they're going to take an average of how long you've been there and what your average income is, unless you used to work 40 hours and now your position has changed to where you're working 32 hours. What I mean by that is in the process of the loan, they're going to verify, they're going to reach out to the employer and ask, with a verification of employment, what's the job like? What's your title? How many hours do you work? What's your wage? What's your salary? What's your hourly? They're going to ask all those questions. So if you truly have a reduction in your hourly, how many hours you're going to get on an ongoing basis, that could be problematic. But if it's a little slower right now, so you worked a few less hours, that should be fine. No, I still get 11 or 12 hours a day. I still average 115 hours every 2 weeks. Perfect. So I wouldn't worry about that part of it, that where you just had a temporary decrease in what you did here recently. We don't just look at the current pay schedule. We look at the year to date and then we divide it back. So we're not looking at, a snapshot of this week. We're looking at the whole picture because we're trying to look at 3 years in the future. When we're looking at ability to repay, we want to know what you're going to be able to do over the next 3 years. And the best way to do that is we look back at the prior 2 years, and that's just the way, underwriting operates. So yeah, you should be good there. Oh, hey, thanks for all the likes, guys. I appreciate that. Like I say, I'm newer to TikTok, so if you play with all the buttons, it helps me out, and I really appreciate it. Like, share, follow, all the things. So I appreciate that. How many times can a veteran use a VA loan? Is there a cap? There is no cap. You can use it as many times as you want, and when you pay it off, it restores your entitlement. What that means is, let's say you live in one house and life changes and you can't live there anymore. You don't want to sell it because you didn't own it very long, so you can rent it out, and then you can buy another one if you have remaining entitlement with no money down. So I've done that a lot of times where I'll help a veteran buy an additional house that they're going to move to and live in with no money down, and they are going to rent out their current home that they're living in. And then when either one of them are paid off, that amount of VA entitlement is restored so they can do it again. So that's how that works. If that doesn't make sense, reach out and I get into more detail with you there, but that's just a short answer. Hopefully it works out. I'm stressed out because I thought I was in escrow, but now I got to reapply. for the loan. We'll see how it plays out. David, I mean, if you're nervous, reach out. I'll be your backup plan, right? So reach out, say, second option or something like that, and I'll send you the application link. And then if you're applying with them, you can apply with me, and then whoever gets you to the table first wins, right? So if you're insecure about the ability to close that loan, that's an option. And I do the same thing on my end, where I work with over 200 lenders as a mortgage broker. So if I'm feeling not so confident in a certain lender or a certain situation, I'll send it to another lender as well. I don't need you to reapply to do that. I would have to redisclose, meaning I don't need you to give me any more information, but I'd have to send you new disclosures to e-sign. You don't need to fill anything out. So maybe that's what you're doing, is you're just getting redisclosed, or do you really need to enter in your name and your address and all that stuff over again? That's an application. So let's see. I bought my land. Built my home in Hurricane Katrina. Got sued for putting on blue tarp. Had to. Let's see. It seems like there's more to that, but so you got sued. Did you have to remove the house? Did you have to tear it down? Had to borrow money on my home. David said, no, I got to submit my address and everything. I go to the portal of the lender and it says loan no longer exists. Yikes. Yeah, I'd definitely get a backup option. That doesn't sound good or right at all. So I've never seen that. I've never run into that, and I've done thousands of loans. So I don't know. I don't have an explanation for that. Sean says, I'm a roofer in Texas, great state of Texas. I'm in the DFW area. FEMA called asking if we blew tarp. What is blue tarp? Is that a... What is that? That's just literally covering it over with a blue tarp on roofs. Thoughts on buying a quadplex FHA or conventional and living in one of the units? I mean, both will work really well. I guess my personal opinion there is FHA is going to give you a lower payment, and so that's going to increase your cash flow. So then if you stay there for a year, then you can keep the FHA loan in place, and then you can move out and rent out your fourth unit that you were occupying and really increase your cash flow. I'm a big fan of that strategy, because right now the ability to repay is really difficult with the high price of homes, the higher interest rates, even though they're coming down. Insurance is really expensive. Property taxes are really expensive. So there's an affordability crisis. That's a good way to go about it, because you're attacking the problem by creating more income. Bought a house at 2.25%, around $50,000 after down payment. Should I start making double or up payments? Personally, I'm not a fan of that. Right? You're going to save 2.25%. Why not, whatever you were about to pay over, why not invest that money? You need to make, barely anything. You could make a guaranteed interest that it's going to accelerate over this, and then you're compounding the gain over the, run an investment calculator and run an amortization savings calculator. The investment calculator will have a bigger number over the time period you have left. I promise you. That would be the better way to go. I'm not a financial planner anymore. I was years ago, but I would say I can give you kind of one-off opinion stuff. If you want to reach out, we can have a conversation, but I can't officially give you any financial advice. So I would say reach out to a financial planner or somebody, but talk about what I just said. Don't put extra money towards saving 2.25% interest when you can apply those same dollars to growing asset of a greater value. Let's see, how long would I need to wait to get a second property afterwards with refi? I think that is talking about the fourplex. You don't need to wait. Aaron said, thank you. You're very welcome. Appreciate the comments. If you bought that fourplex, the only reason why you'd have to wait to get the next property is if it's your primary residence. But you can right away get a second property, whether it's a second home or investment property. And I have strategies to help you buy investment properties with very little money down. It does require a motivated seller. So if you find a situation where a motivated seller is willing to hold back 40% of the purchase price, where you're going to make payments to them on 40% of the deal, and you're bringing 60% to them, then you're going to be able to buy that place with literally no money down. But I'll also say little to no money down, because we need to figure out the 10%. I can get into more information about that. You're in Minnesota. That's my former home state. That's one of the states that I'm licensed in personally. But my team that I work with, it covers 48 states. The only two states that we're not in are New York and Connecticut. But even if you're in those states, I have personal friends that I would refer you to that would be able to help you out. And they've worked with me, and they, I'm kind of like sales manager, mentorship, whatever. So they can always access me to help structure those deals as well. David says, I'm in California. What's a good time to call you? I'm going to be a little bit out of the office for the main part of the day, like right after this live. I'm going to be heading out. So I would say later this afternoon would be a good time to reach me. But always text, right? I always encourage people to reach out, call, text. If I'm available, I'll answer. But I do know after the live here today, I'll be tied up for the next 3-4 hours, somewhere like that. If there is enough VA entitlement, is it possible to close escrow on 2 properties simultaneously? No. That's not possible, because VA has to be the primary residence only. So you won't be able to buy a second home or an investment property with a VA loan. So it would be just the house that you're going to lay your head at night. Just a simple no should suffice there. For a bank statement loan, 6.3 sounds fair to you. I think so. I would assume it probably has a prepayment penalty then, maybe. I haven't priced one out in a little bit, but I heard the non-QM loans are actually pricing out more aggressively than agency loans right now. So I'd have to price it out to give a firm feedback on it. But, take a look and see if you have a prepayment penalty on it. Just understand how many years and how much that's going to cost you, if it has one at all. And then also look at your closing costs. So, but yeah, the 6.3 interest rate does sound good. Do not buy a house in today's market. There's going to be a market correction soon. Maybe. Let's see. 20% down only. No prepayment. Good. Bank statement loans, you can get by with less down payment, but obviously putting down the 20% is helping you get that 6.3% rate. Yoli says, hello, I'm looking to buy a home before retirement in a different state. Is this possible? Absolutely, yes. Luis, I appreciate you. Closing costs are $25,000. Dude, what's your loan amount? That seems a little high. And so it sounds like you might be buying down that interest rate. I never, ever advise people to do that. You know, keep your money in your bank account. Don't just hand it to your bank to pay for future interest. So we can get into a couple illustrations on that if you want to reach out. But yeah, my personal opinion is keep your closing costs as low as possible. If you could have one lower, closing costs or interest rate, which would you have lower? I would always have lower closing costs because interest rates fluctuate. And if they come down, which I think they will, you can refinance. But it's not going to make sense to refinance if you just paid a whole bunch of money to closing costs. So keep that in mind. Now back to, buying a house in a different state to retire in. The only thing that's tricky about that is you need to think about repaying the loan. So it depends on how you get your income, right? So if you're getting retirement income, Social Security, all of those things, they're not tied geographically to where you're at. So as long as there's enough income to qualify for the house, you can literally buy it anywhere in the country. And we'll be able to put that together for you, no problem. And so, yeah, these are a lot of really good questions. I really appreciate the interaction here today, guys. Retirement income. Yep. So to prove retirement income, after you do your loan application, we'll ask you to send us either the 1099 or the award letter as a way to prove how much we're going to be able to use in the transaction. And if you need help finding those, I can certainly, guide you through that process. Hey man, MB in Utah, what state are you in? I am in Texas, but like I said, my team covers 48 of the 50 states. So the only two states that my team is not in is New York and Connecticut. But I have friends that I can refer you to if you're in those states. And like I say, I mentor them. And so if there's questions, I'm accessible to help answer questions about structuring the deal, that kind of thing. But happy to do it. Does it matter if my daughter already lives in the state? It doesn't matter, but it doesn't hurt, right? So certainly, if you are looking for a property, you want to get, boots on the ground and walk the property with your real estate agent. Maybe your daughter can do that for you virtually. I've done that before where, I bought a house that I didn't even see, but I had my in-laws went in and looked at the property and just kind of gave us their opinion and, did a little video call to kind of point out, hey, this looks a little bit, sketchy or something. I work in New York and looking to buy in Georgia. Perfect. Obviously, any income that you're getting through work, we might not be able to use unless we can show that you work remotely. They're going to be looking for continuance of your current income. If you were going to use your work income, you could still buy the house in Georgia as a second home, right? You intend to occupy it sometimes, then you'd be able to use your income where you're currently at, if the numbers work right. But that's a couple ways to do it. And then I'm also curious, like, how soon are you looking to retire? Because if you don't have like a certain date yet, maybe you can use your income where you're currently at. So you're retiring March 2026. Well, first off, congratulations. That's awesome and exciting. And yeah, if that's going to show up, if I were to do written verification of employment, I send that to your employer and they're like, her last day is March 2026, then we're not going to be able to use that income in the transaction. But it sounds like you have some retirement income, so we can take a look at that and get you pre-approved based on that amount. And then we send you a pre-approval letter. You work with your real estate agent, find the houses that you want to take a look at, submit offers, and away we go. So, and I actually know some good agents in Georgia. So happy to introduce you. And again, I appreciate all the comments. So again, I see a lot of people have kind of been joining here. So I'll just, reintroduce myself. My name is Kenny Murden. I'm new to TikTok, not new to lending. I've been lending since 1999. Great resource for real estate agents and loan originators that are looking for creative solutions to structured deals and to offer, different, maybe unique strategies to buy homes or refinance. Yali, thank you as well. Please do save the phone number, call or text, and feel free to reach out. I'd love to help. So if you or anybody has any questions about buying a home or refinancing, certainly reach out. We're here to help, and I've been doing it a long time, and I might be able to shorten the bridge to be able to get you from where you're at to where you want to be, and maybe give you a little bit of a fresh take on it. Some of the other things that we talk about is, there's 3 different lending types. I'm a wholesale broker, but there's also correspondent and there's also retail. And they all have their different advantages and disadvantages. And, I don't try to just claim unbiased that I'm the best across the board at everything. In some circumstances, you have an advantage, working with one of the other two types of loans. One of the examples that I give for that is if we're on a tight timeline and I'm requiring one last item, I need that item as a wholesale broker to be able to clear the loan to close, to actually physically close and fund the loan. On the retail side, since they're funding the loan, they have the flexibility that if they want, they can say, all right, we're going to get that last paycheck stub or whatever is holding it up. We'll get that from you, but we'll go ahead and close today. They have that ability to do that. Now, will they always do that? No, that's a very risky thing, because if they don't get that item from you, then they have to repurchase the loan, and it's expensive and it's a hassle. But I have seen it happen in the retail side where they will fund a loan prior to clear to close. Again, it's risky, but that's just one example of what they can do that I cannot do. To just say it's not always one size fits all, that I'm the best across the board. I would say that our technology has gotten very good. We're very fast at closing. I've oftentimes gotten clear to close in 10 days, 10 business days, because you have a 3-day period. I have to disclose the loan and wait 3 days. That's a federal thing that's across the board. Then I have to have a locked loan estimate go out. That's day 4. And then we need to get the closing disclosure. And that has another 3-day period. So that's 7 business days that need to go by is the quickest way that we can get a loan closed. And inside that time, if it requires an appraisal, usually the appraisal is the biggest thing that holds us back as far as time goes. But I also like to say, I'm only going to go as fast as you want to go. So I like to give you full control. I like to give you all of the information to make the decisions that you want to make, as far as let's go with this loan versus that loan. Let's go with this rate versus that rate. I'll give you all of those options, and then we can go as fast or as slow as it's going to work best for you. David says, can I get a DSCR loan on my investment property that is on land trust? So I wonder how many years are left on the land trust. The answer is yes, but you need to have a certain amount of continuance of time on that land trust. Actually, let me see how many years we need. I'll look that up real quick. That's a good question. Let's go sign in. let's see there. Let's see, can I apply for a DSCR loan if I'm going through a modification on my personal mortgage? I mean, you can always apply. I'm trying to think, if you're going through a modification, did you have missed payments in the last 12 months? They're going to verify that. And if there's missed payments in the last 12 months, it's really going to limit your options. We might be looking at more hard money, but there is a lot of hard money out there. So if the deal makes sense, reach out. We'll find a solution for you. Let's see, minimum 12 months of seasoning. This didn't understand my question. My AI didn't understand the question about the land trust, so I'll have to get back to you on that. But the question that I have in my mind is, how many years left on that land trust are required to be able to get a 30-year loan? Like, if you only have 30 years left, are they going to fund it? What if you have 20 years left? So that's kind of where my mind is at. And then, is there something in the land trust lease that automatically renews with like an automatic increase of rent? So all of those things just kind of need to be, they always say sometimes the easiest way to answer that question is read the contract. So, but I'd be happy to dig into it if it's something that we want to go down that rabbit hole. It just sounds like I'm going to have to actually get on the phone with somebody to figure it out. So appreciate all the comments, the questions. I saw 2 comments here today. We're talking about fear of home prices going down. I'd be curious if you think home prices are going to go down over the next few years. Put a 1 in the comments. If you think home values, like me, if you think home values are going to go up, put a 2 in the comments. I'm just kind of curious what people's opinions are on home values going up or down. 2 is it's going to go up. So you guys are agreeing with me that it's going to go up. But yeah, we had a couple of people in here that were talking about, hey, I'm kind of worried about buying a house right now because I think home values are going to go down. And another guy was saying it's a terrible time to buy right now because home values are going to go down. And I don't know what that's based on, because right now I'm looking at, we're coming to the end of Jerome Powell's term in at the Federal Reserve, and he's been responsible for keeping interest rates as high as he can possibly keep them, even when the data and all the pressure from the politicians are to push interest rates lower. He's just kind of been like staving that back. Now, some people are going to look at that as heroic because he's trying to keep the dollar as strong as possible. But the mandate is to have full employment and to have a strong dollar as far as like low inflation. So it's really interesting to see what's going to play out there. I don't know. I don't have an opinion on which way is good or bad. Obviously, I'm going to benefit being, I'm a loan originator. I'm going to benefit when interest rates come down. And I think they're going to come down pretty aggressively when we have the new federal chair in there, and probably a little bit more malleable to the politicians. So that's why I think prices are going to increase. That's why I think we haven't topped out in the stock market. That's why I haven't pulled my money out of the market. I'm still risk on, when I've been hearing the same rumblings that things might crash, right? But you can go out there and say crash, 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 and when it finally does happen, then you were finally right. But in the meantime, if things keep going up, I have friends that, have been telling me that things were going to crash prior to COVID, and I've been buying homes the whole time, and I've been selling those homes for more money. So while they've been waiting for a crash, I've been investing and making profit. So I don't know. I mean, then who's right in that situation, right? If the goal is to profit, I was right. And, but if we do finally get a crash in a year, in 10 years, in 30 years, then they're right. But so what? Who cares about being right? Just do what makes the best financial sense. That's my opinion. But is this hour already gone by? Holy Hannah. So yeah, I get on here 10 a.m. and I'd say sometimes 4 p.m. I haven't been doing the 4 p.m. show recently because my co-host has taken the month off. And if she's going to take off, that makes me want to take off. But anyway, what I was going to say is we only have 6 minutes left on the live here. So appreciate all the comments and all the questions. It just made the hour fly by. But last call for comments and questions. Sounds like we have a few people that might be reaching out. If you or somebody has questions about a loan, jot down my phone number. It's right there above my head. Call or text, and love to connect and definitely help out any way I can as far as questions pertaining to real estate or mortgages. So everything else is on the table as well. Somebody was asking about a little bit of investment advice. Should I accelerate my payments if I have a 2.25% interest rate? Easy as hell no, don't do that. Any use of your money, if you're able to borrow 2.25% money, do it, because you can get a better return than 2.25% with very, very little effort. And I know several ways right now that can get you a guaranteed return much higher than that. And obviously if you go speculative, then you can make a lot more money, but then you could also lose money. Warren Buffett's number one rule in investing: don't lose money. But I mean, when there's a guaranteed way to do it, definitely don't accelerate your payments. Now, one thing that we do talk about on the channel here quite a bit is a debt consolidation refinance. So a lot of these people are holding on to really low interest rates. Let's say a 2.25% interest rate. And they might be holding that thing around. It's only like $100,000 loan, and they're carrying another $50,000 in consumer debt. And that consumer debt is greater than 20% in interest. So the blended rate on that is going to be somewhere around, 13, 14%. And so if you take that blended rate and you consolidate all of that debt, then you're dropping 14% interest down to 5 or 6%, right? So you're going to save a whole bunch of money on interest alone, and then you're stretching it out through amortization, so your payment's going to plummet, for that whole $150,000 in total debt. So that extra money that you're not spending on minimum payments, what can you do with that money? Well, I would suggest that you can invest it. Right? But I can't advise you on investment, but that's what I would do with it. What else you could do with it is you could accelerate the payment. So even though you took your 2.25% interest rate and you raised it to 5 or 6%, but you had a blended rate of 14 in this example, you can lower that rate by paying over the minimum payments, and that gives you a net a net rate effect of lower, because anything you pay over the minimum payment gets applied to principal at 0%. So now you're multiplying a 0% rate with your interest rate to get a lower than average. The third thing you can do with that extra money in savings, if you're doing a debt consolidation refi, is you can loosen up your budget. If you're not having enjoyment, if you're not having a Merry Christmas, if there aren't as many presents under the tree this year, if you're on a hot dog and ramen noodles budget, you can actually enjoy life a little bit more. If you're able to afford it better with a more manageable monthly budget. I caution against that. I think we're here for only a limited amount of time, so I definitely get the understanding of wanting to enjoy the time that we have here on planet Earth. But, I also don't want you to get in the habit of having to, run to the well too many times. Your equity is finite, right? So I want you to be a good steward of it, and that's not up to me, but those are your three options, and so I just point those out. Lastly, anytime you refinance, whether you're just lowering your interest rate or doing a debt consolidation refi or whatever the case may be, some of the advantages that you have is we're going to very purposely close your loan at the beginning of the month. Here's why. You're going to not only skip that month's mortgage payment, but you're also going to skip the one behind it. So if you close today and you haven't made your December payment yet, you don't need to make your December payment because we're paying that loan in full. But also, we're collecting interest through the rest of the month. That's January's payment. So you're skipping that month as well, and your next payment wouldn't be until February if you were closing your loan today. So one of the benefits to refinancing is you're going to have 2 skipped months of payments. And then if you look on your mortgage statement, it's going to say, what your escrow balance is. If you escrow for your taxes and your insurance, that money gets refunded to you 2 or 3 weeks after we close. So that's another little budget reprieve that you're going to get. And then the idea is then when the payments start up again, you're going to be saving hundreds of dollars a month from that point on. So those are the advantages to refinancing. If that's going to make sense for you or somebody that you know, please reach out, call or text, share the channel with them, follow if you like the content, all of the things. But that is my time for today, guys. It is now 11 o'clock Central. This hour absolutely flew by, and I appreciate you guys being here. I look forward to seeing you back here again. If you have any questions, reach out. Otherwise, looking forward to, is it already Friday tomorrow? Holy cow, this week is flying by. But I appreciate you guys. Have a wonderful day, and hope to see you again.